earning reports and busy week. Hello and happy Good Friday in advance. I'm Ahura and will be with you to review the most important events of the short week ahead with banking holidays in many countries on Friday. Doubts after ending the war in Kiev and increasing fears in the eastern state of Ukraine in line with the election in France, increasing the level of uncertainty in the financial markets, while it's going to be a huge data week with the several central banks meeting and ECB in focus. At the same time, the first quarter earnings season starts this week with the major Wall Street bets. Number 1, Chinese inflation. After a few months of the optimism, with slowly increasing the producer inflation and latest COVID-19 outbreak, and the consequence of the strict lockdowns in Shanghai, we are expecting to have a weaker data to confirm that both producer and consumer inflations are increasing. Expected data are supposed to put a little bit more pressure on Chinese yuan. Number 2, British data. It's a very busy week for the British economy. The first round of these important data will be released on Monday. GDP, construction output, trade balance, and manufacturing production numbers will publish on Monday with mostly declining estimates. These weaker than expected numbers should be negative signal for British FTSE. Number 3, US inflation. Nothing will be more important than US inflation numbers on Tuesday. We expected another increase to 8.4% in March from 8% in February. With food, energy and service price picking up, the future of US inflation is not bright. If we exclude the food and energy, which tends to be a volatile, core CPI is expected to rise by 6.6% year over year, since data increases faster and it creates. Number 4, RBNZ meeting. After the Reserve Bank of Australia, it's New Zealand's turn to hit the banking meetings, even if it's not going to make any changes in its policies. Since the Reserve Bank of New Zealand started the hawkish policies much faster compared with other major banks, with uncertainty in the market, committee members of the bank most probably will decide to hold, which is positive for the stock markets and downtrend for the kiwi. Number 5, Bank of Canada. In March meeting, Bank of Canada increased the rates by 25 basis points. As I mentioned in the March meeting, unlike other major economies, the increasing oil prices is positive for the Canadian economy. Therefore, we are expecting the Bank of Canada to lift interest rates at more aggressive pace with another 25 basis points. Lune should take advantage of it and increase against its crosses. Number 6, the second round of UK data. BRC retail sales monitor, RPI, CPI, and PPI numbers are due to publish on Wednesday, with CPI expected at 6.7%, PPI at 10.6% and RPI at 8.4%. Estimated numbers will likely confirm that the British inflation is at its 3 decades high to put more pressure on the London Stock Exchange and British pound. Number 7, European Central Bank meeting. As you know, recently IMF and many other economic institutes lowered their Eurozone GDP forecast, and now overall expected economic growth is modestly over 3% this year. At the same time, inflation is increasing sharply, putting more and more pressure on ECB to change its policy and stop the raising prices, while economic growth is the concerns of many others. For now, I don't expect the interest rates to change in this meeting, but to expect ECB policymakers to taper their asset purchases. It should support the euro in the short term. And finally, number 8, earning reports. The first quarter earnings season will kick off this week with banking reports at the center of the stage. JP Morgan and Delta Airlines, as always, will report on Wednesday. United Health Group, Wells Fargo, Morgan Stanley, Goldman Sachs, and Citigroup also on Thursday. Thanks for being with us and hope this week going to be an amazing week for you.